Welcome to the Capital News. I am your host, Alex Karitis. Today is May 10th, 2019. Thank you so much for joining me. I hope everyone out there is doing well today. So, the market news. It's just another roller coaster ride again today, folks. But what took place? The S&P closed up 11 points. The Dow up 114. The NASDAQ closed up 6. Meanwhile, the Russell 2000, the small cap index, was able to gain 3 points to close for this week. But again, this doesn't tell the full picture. This is very much akin to what took place yesterday, yesterday, where the market was able to rally. And we're going to get into why this was the case. But you know why. Because we had some people out there tweeting and making some comments, and you know who I'm talking about. But earlier in the day, the S&P was down as much as 45 points. The Dow was down as much as 359 points. The NASDAQ was down 151, and the Russell 2000 was down 24 points. So these indices were able to stage quite the comeback, again, on tweets. Now, this could also be a little bit of maybe some profits, people trying to buy the dip, trying to see what's going on. Maybe this was just a poo-pooey week. This was just a little bit of drama this week for whatever reason. Had to let a little steam out of the engine that has just been a V-shaped recovery since the end of last year. Okay, this is a time to buy. That's an argument. I cannot disagree with that. We were talking here, I believe it was yesterday, about Larry Fink, the CEO of BlackRock, is still talking about his potential outcome with the melt up in the stock market. We did not dismiss that when he brought this to the fore a couple weeks ago. And we are not dismissing it this week just because there has been a massive sell-off in global equities, again, to the tune of $2 trillion. In 4 days, global equities lost $2 trillion because the president wants to come out and tweet on a Sunday evening that he was going to increase tariffs on Chinese goods. Again, this is a serious question. I even took it up to the question, is it a constitutional crisis? Is this right for the commander-in-chief to do such a thing? Should any one individual have that much power? I say no. You can disagree with that, and that's fine. But I do not think that our founders had ever foresaw this happening. In fact, the presidency was really supposed to be one of limited power. Now we have a president who's basically a global financial dictator. Let me just take to Twitter, and the markets will move up or the markets will move down, whatever I want. I'm telling you, this is a game for him. This is sport for him. Do you think your 401k, your retirement plan, your job, is that a game to you? Because this has consequences down the line. It really does. So what else happened? Because we're going to go all around the world here and look at some other indices. But I'm going to stick with our typical routine. Oil, WTI, sits at $61.58 a barrel. Brent is at $70.74 a barrel. Not much movement in the commodities markets. Gold, $1,283 an ounce. Silver is at $14.74 an ounce. So again, not much movement into the precious metals markets either. Still not seen as the quote-unquote safe haven bets. Just did not catch a bid at all this week. And in fact, silver just pretty much continues to slide to the downside. The U.S. 10-year Treasury, while it was also down quite a bit, it was able to stage a rally, as was the case with equities. But the 10-year Treasury sits at 2.455%. And the VIX, the volatility index, lost a whopping 16 percentage points today and now sits at $16.04. So the volatility index got whacked. Now, going across the pond, if we're looking at the FTSE 100, that is the UK index, they were up 1 percentage point. The DAX, that's the German market, they were up almost 2 percentage points today. And the CAC, that's the French market, they were up 1.5 percentage point today. Moving over to the Asian markets, the Nikkei, the Japanese markets, were actually down 1/3 percentage point. The Shanghai markets, the Chinese markets, were up 3 percentage points today. And the Hang Seng, the Hong Kong markets were up about 1 percentage point today. Now, on the back of some of the Asian markets, particularly that of the Shanghai and the Hang Seng, there's a lot of speculation out there that that was the communist Chinese government intervening to prop up their stock market. Now, that's with the Shanghai markets, but there's still going to be ripple effects trickling through the Hong Kong market as well, through the Hang Seng. So, I mean, this is no surprise. This is what we expect from a communist party, a communist government. This is what they do. There's no ifs, ands, or buts about it, that those types of regimes, that type of government is going to intervene at every level, at every cost. No doubt about it. That's not what's supposed to happen in the United States of America. No, it's just a question of different means. Now, the Chinese might go directly into the markets and intervene. Here, we have a president who simply tweets, or we have a Treasury Secretary that comes out and makes comments. But don't forget, we still have central bankers here, too, who are pulling the levers behind the scenes. So don't forget that either, folks. So, is this a free market capitalist system? No, it's not. No, not even close to it. Not even close to it. You know, the president said something in his inaugural address that he was saying it pretty much throughout his entirety of his campaign, is that the power belongs to the people, not vested in the president to that type of magnitude, which we have grown accustomed to over the past decades. He said, this is the biggest power transfer, basically paraphrasing, from this office to you, the people. Well, I wonder if he thinks anything of those words today when it comes to how he is moving markets. Again, global equities shed $2 trillion this week alone. And that was on one tweet on Sunday. And of course, it continued. But nevertheless, that was to the downside. You also had the president doing this for the past several months, since the beginning of the year. Either himself, his Treasury Secretary, his economic advisors, his political advisors, whatever lackey he wanted to send out there, would say, look, this is going to be a great deal. We're going to have a sit-down. We're going to have a signing ceremony at the end of March. Didn't happen. Oh, well, maybe we're going to do it at the beginning of April. Nope, didn't happen. This is going to be historic. Nope, it's not. This isn't anything great. And I don't think that any deal, especially now, can truly live up to the hype that has been sold not only to the American people, but to the rest of the world, that this was going to be the biggest and best deal ever concocted. It's just not going to be. So now this is just another lever, and continues to be a lever that the president and his administration can continue to pull to and fro on any whim, because we don't know what's going on behind the scenes. I mean, if he's trying to do this for the sake of transparency, stop, Mr. President. Stop. Period. Stop. Because you're not being transparent as to what's going on, because we don't know the details of this deal. We just know maybe the Chinese stopped and they were reneging and they wanted to renegotiate. And they, redlined a whole bunch of proposals that we put through and we thought we had an agreement on last minute. We don't know. So unless you're going to be fully transparent and allow everybody to know what's going on, just don't say anything. Seriously, because everything that has been said has turned out not to be true. There was not a signing ceremony. There was not a remarkable deal. There is nothing historic about this except its lunacy and how ridiculous this whole negotiation has been. Because in the midst of all of this, this has real effects. And the president even talks about this a little bit in some of his tweets today, which I'm going to get to right now. But here's what he said earlier in the day, and there were several of them, so bear with me here. Over the course of the past 2 days, the United States and China have held candid and constructive conversations on the status of the trade relationship between both countries. The relationship between President Xi and myself remains a very strong one, and conversations into the future will continue. In the meantime, the United States has imposed tariffs on China, which may or may not be removed, depending on what happens with respect to future negotiations. So we have no idea how much longer these tariffs are going to exist on these Chinese imports. We also don't know what extent, if any, the Chinese are going to retaliate with. We just don't know what they're going to do. Nothing has been said. Although they have come out and said that there will be some sort of retaliation, but something could happen tomorrow. Something could happen Sunday. Remember, it was just last Sunday that the president came out and tweeted, "We're putting tariffs on. The Chinese are moving too slowly. This is enough. I'm done with it." Here's another tweet from the president earlier today. Your all-time favorite president got tired of waiting for China to help out and start buying from our farmers, the greatest anywhere in the world. So why would the president start to mention the farmers? Well, because the farmers have been adversely affected by a lot of these tariffs. And again, this trade deal is not about soybeans and corn and cattle futures. This has a lot more to do with intellectual property theft, forced technology transfers. We talk about this all the time. Do you want farmers to do better? Sure, we want everybody to do better. But that's not what this trade deal is about. It's about structural reform. It's about slowing China down on the methods that they have been utilizing for the past couple of decades, taking advantage of administration after administration. And some of these corporations, American corporations, fine, here, you want all of our IP, here, take it. You want some of our technology, here, take it. Because we just want access to 1.4 billion people. There was no leadership. So, I mean, this is why this is such a touchy issue. This is why I can go back and forth on, all right, yes, some of this stuff needs to be done, which it most definitely does. And then the way in which it has been handled, I think has just been a true shame. I really believe that. Here's another tweet. Talks with China continue in a very congenial manner. There is absolutely no need to rush, as tariffs are now being paid to the United States by China of 25% on $250 billion worth of goods and products. These massive payments go directly to the Treasury of the United States. Again, the president thinks that China is writing a check to the United States of America, which is not the case. He continues, tariffs will bring in far more wealth to our country than even a phenomenal deal of the traditional kind. Also, much easier and quicker to do. Our farmers will do better, faster, and starving nations can now be helped. Waivers on some products will be granted or go to new source. And then he continues once again. If we bought $15 billion of agriculture from our farmers, far more than China buys now, we would have more than $85 billion left over for new infrastructure, healthcare, or anything else. China would greatly slow down, and we would automatically speed up. So if you're trying to read in between the lines, it really appears that the president, tariff man here, thinks that tariffs are the better option than having some sort of phenomenal deal of the traditional kind, to quote the president in his tweet. So clearly we have a stock market here in the United States, because I'm going to exclude the Asian markets, particularly that of Shanghai, because that's direct intervention by the Chinese. Not to say that it isn't direct intervention here by the United States either. You remember the plunge protection team, maybe even our Federal Reserve? I mean, so it's not beyond the pale here, ladies and gentlemen, either. But I'm going to exclude the Chinese because it's pretty much a given that they were the ones who were manipulating their markets. I mean, if you're getting involved in the Shanghai Composite, you're better off just going to a casino, to be quite honest with you. And there's really not much difference now, even here in the American markets, because nobody can predict what the tweeter-in-chief is going to come out and say next. But, I mean, what's going to happen? If we're reading between the lines, the president really seems to think that tariffs are better. But nevertheless, we live in an atmosphere, in an environment where these markets run off of hope, they run off of tweets, and they run off of central bankers and or governments. That's what we're here for. So, hope is really what the markets, I think at least the U.S. equities, were clinging to today, because there was constructive talks. That's what we were told. The talks were constructive. This was the word that came out from both the president in a tweet, which we read, and from the Treasury Secretary, Steven Mnuchin. He came out about noon and said the very same thing, that the talks are constructive. And if you look at a daily graph of the S&P, the Dow, the NASDAQ, and the Russell, right around that time, boom, bang, like you turned on a light switch. The markets just started going up because, oh, well, now they're constructive. You got to be kidding me. How much are the markets this stupid, or do they just not care? Or is it a combination thereof? Because the markets have been virtually lied to and just strung along for the past 5 months. Anytime somebody comes out and says, yeah, things are fine, things are constructive, things are going swimmingly well, we're going to have a signing ceremony here shortly, the markets just take off. And when you have markets that do a complete reversal, you had the NASDAQ was down 150 points, ended up closing up 6. You had the Dow down 359, closing up 114. Those are huge swings. That's a big rally. Off of what? Well, we had candid and constructive talks with China. Maybe or maybe not the tariffs will stay on depending on what happens. Give me a break. I mean, you would think by now that the markets would just have caught on to what's going on here, that this is just a game that the president is clearly playing, and they're still buying it. They're still playing it. I mean, I guess that's the world in which we live. Hope, tweets, and central banks. Now, some of the other things that has to deal with hope, we had Uber, the ride-sharing company. They IPO'd. How'd they do? Oh, they lost 7.6% for the day. Their shares are currently trading at $41.57. So they lost 7.6 percentage points today on their first day of trading. But worry not. Uber, they still raised, I think, a little over $8 billion. $8 billion. And now they have a market cap of $76 billion. $76 billion. How does this relate to Lyft? Because we were talking about Lyft a couple weeks ago or whenever it was when they IPO'd. Well, they also lost 7.4% today, and now they're trading at $51.09. What's their market cap? Not even close to Uber's. $14.6 billion. So we got Uber at $76 billion, and we got Lyft at $14.6 billion. What a difference. You know why? Because Uber loses more money. Yeah, that's right. Uber loses more money than Lyft. And therefore, in the world in which we live, the more money you lose, the bigger your market cap. That's the stock market today. I can't make this crap up. This is hope, because they bring in revenues, but they have no profits. In fact, they're bleeding money. But we're going to hope that one day soon, somebody will get their act together and bring everything together, and we'll start making money. This has been the same tune, same song and dance with Tesla. This was the same song and dance in the .com era. Does anybody ever learn their lesson? No. I mean, a lot of people who were trading back then are probably retired, and so now a lot of the younger traders out there, they have no recollection, nor do they probably care what took place, because they'll just simply say what everybody says, this time's different, which, of course, when you hear those words, you run for the hills and you take cover. But that's where we are today. That's where we've been this week. That's where we're likely to be next week. I would rather talk about a whole other host of issues, but unfortunately, I just don't think that's going to be the case. This president loves to be front and center. He loves the attention, and boy, did he get it this week, and boy, is he going to get it next week, because everybody's going to be on pins and needles as to what's going to take place. Or the market's going to think, this was just a week. This was just, to quote, the art of the deal. This was just the president, doing what the president does, taking to Twitter. $2 trillion in global equities lost. Who cares? No big deal. Nothing to see here, folks. The president was just taking to Twitter. Markets move. That's what happens. We're just clinging to hope that an actual deal is going to be struck. However, even in the president's own tweets, which we just read here a few moments ago, he praises tariffs. He loves tariffs. He thinks that, the Chinese are writing checks to Uncle Sam going straight into the U.S. coffers. Doesn't work like that. You're paying it at the cash register, or you soon will be. Believe what you want to believe, I guess. But, when I hear a bunch of BS, I'm going to call it out. And this president has been stringing along everybody for the past several months with no end in sight. In fact, this is going to continue. It's going to be interesting to see how the Chinese respond, because there's not much more they can do as far as the totality of the tariffs on U.S. goods. They pretty much have 100% of U.S. goods that are subject to tariffs. Of course, they could increase the rate. They could do some things in the currency markets. They could start to sell treasuries, which wouldn't be a very good thing, because that'll end up pushing rates higher, which, of course, is not what we're looking for. At least that's not what the president is looking for, I should say. So, in a strange twist, was this market sell-off a way for the president to end up getting what he wants by having the Federal Reserve come back to the rescue and cut rates? I don't know. The president plays games. He doesn't care if it's your 401k, your job, or anything. He'll get up on a stage and talk tough, but then you got to look at the results. And yeah, we have some headline news that looks good, but then when you dig beneath the surface, it ain't so pretty. And you know what I'm talking about because that's what we do here. We talk about that all the time. So stay tuned to next week because it's going to very likely be the same type of scenario. It's going to be tweets, it's going to be hope, and it's going to be central bankers. Thank you so much for joining me today, ladies and gentlemen. Please do enjoy your weekend. Sunday is Mother's Day. Make sure you take care of Mom. They most definitely deserve it. So happy Mother's Day to all you great mothers out there, especially to mine. Love you, and we'll see you guys back here on Monday. Please like, share, subscribe, get the word out, leave your comments. We would love to hear from you. This is the Capital News. I am Alex Koritis. Godspeed.